I'd like to start out with, if you don't mind, a discussion of what is the difference between a Chapter 7 bankruptcy. First of all, what is a bankruptcy? And I know you're not a lawyer, but what is a bankruptcy, and what is a Chapter 7 versus what is a Chapter 13? Can we start there?
I guess in general terms of bankruptcies, when someone's having some type of life event that is prohibiting them from being able to make their monthly payments on time to their creditors. Right. So then they'll file for bankruptcy, where they petition the courts to protect them from their creditors. And there's basically, for a consumer, two major types of bankruptcies, whether it's a Chapter 13 or Chapter 7. The Chapter 7 is where you petition the court and you basically say, there is no way I can pay these creditors back. And you go through a process with the trustee of the courts to prove that.
Yep.
And if that bankruptcy is granted, you're discharged from that bankruptcy, it wipes away whatever debt that you've included in that bankruptcy.
Okay. I would assume the court can look at it and say, well, Cleve does have a little asset, so we're going to make him use some of those to at least pay a portion to the creditors or something like that. Am I right?
That's right.
Okay.
Or they can look at your income that you have coming in and say, I think you could buckle down and pay these creditors back.
Oh, so in other words, a court could say no. A court could say no. You know what, Cleve? You have the ability to control your own destiny.
It's different because in a Chapter 13, you're still going to pay your creditors back. What a Chapter 13 bankruptcy does is it protects the consumer against collection from their creditors, in the sense that they might stop the harassing phone calls, the constant collection companies calling, and instead of making individual payments to creditors, you'll make a one lump sum payment to the trustee of the courts, who then disperses those funds to your creditors over time till eventually you've paid back the creditors. So it's the trustee of the courts acting as an intermediary between you and your creditors to help pay down that debt.
So one way says, I can't do anything more, sorry. The other one says, hey, I can clean all this up if you guys will give me a break for just a little bit.
That's exactly right. And the trustee works with your finances to determine how you need to negotiate with creditors to be able to pay them back in at least some period of time. But you're right. It's going to extend that debt out further to make those monthly payments manageable for your budget.
Let's just say I file bankruptcy, and let's just say I filed bankruptcy 3 years ago before the pandemic started. So would I be able to qualify for a loan if I filed 3 years ago, Chapter 7 or Chapter 13? How does that work?
Yeah, well, the first thing that difference between a Chapter 7 and a Chapter 13 is important to us when we underwrite a mortgage.
Okay, talk to me about that. Okay.
So a Chapter 7, where you walk away and say, I can't pay you back, that has a little bit more harsh waiting periods before you can re-enter the mortgage market.
Okay.
For an FHA type mortgage, you're looking at 2 years from the discharge date of that bankruptcy before you're eligible for mortgage financing. In fact, even conventional loans, a different type of loan, still is 4 years since that Chapter 7 event. But you're right. It used to be that if you had any type of derogatory credit event, boy, you were just out of the market for a long, long, long time. Now we've come to understand that doesn't necessarily represent a long-term inability or unwillingness to repay your debts. It was just a one-time significant event that people can often recover from.
And then so now what about Chapter 13? This is where they've said I want to reorganize. Let's say I did this Chapter 13 myself 3 years ago, and could I get a loan now?
Yes.
Okay.
In fact, what's unique about a Chapter 13 is the bankruptcy doesn't even have to be discharged. You can be in the process of repaying your debtors back through the trustee system. And as long as you've made 12 on-time payments since you filed that bankruptcy, you're eligible for mortgage financing with FHA. One unique thing about that game plan that you just illustrated is that we do have to seek the trustee's permission for you to take on any new debt.
Oh, yes. Okay. That makes sense.
Yeah, they're going to look at your payment on the mortgage that you're trying to obtain and make sure it works with the budget that they approved when they approved your filing of the Chapter 13 bankruptcy, that everything lines up and works.
Because it could affect someone's ability to repay.